Hello everyone, good morning. Today is Friday, September 30th. I'm going to be talking about today's price action and everything that happened. And as usual, we're going to start with bias, right? I'm going to start with bias. And I was told yesterday that, as an example, I say that I thought it was going to be bullish. I say that I thought it was going to be bearish, but I don't really show proof or anything like that. And the reason why I don't show proof, between quotes, is because I talk through Telegram what I'm seeing. Right, and as an example, today I did mention that I was mostly bullish due to the week's bias, yes, and well, it does say edited, so that's not good, but well, mostly bullish due to the weak bias, somewhat bearish due to today's price action, but I do believe it all should be a retracement to continue with the week's direction, and it just added a space between this and this for it to look better. I mean, those that are on the Telegram could just say in the commentary if I didn't actually say that and edited it, but yeah. So I thought it was going to be bullish. The reason why is the weekly bias has been bullish for the entirety of the week. I didn't really like the fact that, as an example, we had this retracement already, right, that had come back down to the 50% and then another impulse and theoretically come back down to 50 and continue with that. It doesn't really tend to work out like that, at least not many times, right? Because this is like a typical high low scenario from retail, right? Retail scenario. So I didn't really like that idea. And through, as I mentioned, through London, we did have reasons to believe why price could have been bearish, right? We have a nice run on sell side liquidity. Price started quite aggressively to the downside, but at the same time, again, it did look like a retracement that could have easily just turned around and continue going higher. Now, as an example, I managed to take a buy that we'll discuss later, but this could have been just a judo swing, a tiny bit of a retracement to this move to now continue lower, maybe retrace further to then continue higher, or maybe the trend just reverses again to continue lower. I can't really say for sure what it will do. Oh, okay. I thought we might have hit that 50. That 50% is from the daily move. Correct. Yeah, because it's all the way up there. Yeah, it is from the daily chart. And yeah, that's what I thought it was going to be. It ended up being that, although it was a complicated price action today due to the fact that we had complicated price action. We had news at the open, which ended up being not as aggressive as I was scared it could have been, as an example. And we do get some really good confluences to go bullish and a few confluences to be bearish, which we'll discuss now. But as you'll see, we actually never really got any kind of opportunities. So let's jump onto today's trades. Today's trades were were actually uniquely bullish. I don't think we got any bearish opportunity throughout the day. So let's talk about it now. Again, bias theoretically bullish, but the session begins at this candle right here. Awful candle, but it is what it is. And we have that price went before the candle, before the open, it went aggressively higher, taking a lot of buy side liquidity. And as you can see, we have a tiny bit of a low being created here in the 5 minute. Goes higher, aggressively lower, and the 5 minute fair value gap that I was looking for was actually filled, as you can see. So we could have not really looked for selling opportunities. Later on, I don't think I took a loss in this. Let's actually check that. I did take a loss in this one, yeah, because we do get confluences to sell. And it was right on this fair value gap, right? Just trying to follow that continuation. And the reason why I was actually not convinced, but somewhat given the bearish side a little bit of a chance, was because we were not barely, but mitigating the 50%. And we had a pretty nice 1 hour order block that price could come back down, mitigate to then continue going higher, right? Now, as an example, I don't know what I chose about the order block. Yeah, it was the start of the body, which, as I understand from ICT, that's what we have to choose. And if we go to the week, it didn't really mitigate that either. So yeah, just wanted to make sure that I didn't mess up on that one. So that's why I look for selling opportunities on that. And if we check, yeah, okay. So we didn't get fair value gap. We didn't get a fair value gap. In my opinion, we do get a market shift. And the reason why I try to sell was this order block here, right? I've seen this like a block, right? That it ranges, goes lower, comes back up, mitigates this, respects that, and maybe then we get the fair value gap, which usually we will use as an entry, but just decided to trade it on the fair value gap. And if I remember correctly, that was the small loss today. That was this. Although I do have one earlier, 10:30. Let's actually go through those. 10:30, is that 10:30 my time or 10:30? Yes, 10:30 my time. So it's this. I can't say for sure. So on the next one, I risked 8.5. I thought this was the one that I actually risked a 8.5%, but apparently I didn't. But it is a pretty low lot size. Okay, I can't really say for sure. Thing is that I lost that I would have not taken on Thunder Challenge because we don't really get the 5 steps. We don't really get that. So starting from that, we could have not traded this. And at the same time, this does happen after the market shift, right? This is what we look for. And if we look into this, we have that the market shift is below this low. Fair value gap should be between this high and the low that causes the break of the low, right? So this basically this leg of price action, as you can see, when we have a fair value gap, so nothing for us to do. And in the meantime, what's actually going on through the news, we also swapped sell side liquidity. We swapped sell side liquidity later on this as well. And as you can see, price starts going somewhat aggressively higher, and we have the market shift right here. Right, lovely market shift. And what is it that we have? We have one fair value gap here, which is not the ideal one, but if we use this, we got the 50% right there. Is that a valid fair value gap? In my opinion, yes. We are supposed to look for fair value gaps between the low that breaks that causes the market shift and the high, in this case, that is the market shift. And as you can see, it does happen in there, right? And also we do have another one lower, which is the one that I mentioned through the Telegram early on as it was created. But as you can see, it's literally that. We're talking about a few ticks, probably. Yeah, 0.6 pips, which means that not even 1 pip completely, so nothing for us to really do. I also looked into this, but as you will see, there were no lower time frame opportunities for us to take advantage of. And don't really remember if I actually traded something in there. I do believe I did. I tried to sell in there. Oh no, I tried to buy. Yeah, okay. So what did I try to buy? Because if you check here, we get the mitigation, and this was the half risk. We get the mitigation on the 5-minute fair value gap, right? Here, right there, you can see how price not triggers, but mitigates that fair value gap. And in the lower time frame, we get a little bit of a, so this is the mitigation, right there, aggression, fair value gap, market shift, comes back in, mitigates that, goes higher, and then completely fails. Now, I've seen multiple of these not working out. Like the first mitigation, or when price barely mitigates a fair value gap, it tends to cause something like this, which ends up acting as liquidity. And I will put out some examples through the weekend if I can find one of those, because it happens a lot. And I've seen that a lot. So it will be nice to have something like that to just use it as examples, right? So what do we get later? We have the fair value gap, right? The 5-minute fair value gap. This mitigation could have been an entry. Again, I did take that with half the risk. Not sure how much that theoretically is. That's 483,000. It's actually quite a lot. But theoretically should be. So I was taken out by 10:13, so 11:13 my time. 11:13. 246. Actually, that's full percent. And I don't know what this is. I do not know what that is. This is one loss. Second. That's it. Oh, I have a sell on GBP, don't I? I have a sell on GBP. There it is. That's the first. Okay, now it all makes sense. So this was a 0.5% risk. This was a 1% risk. And this was a more than 1%. We're talking about that now. Okay, now it makes sense. Yeah, I was looking to GBP dollar and I saw that there was a bearish fair value gap to maybe try to take advantage of. And here, this stop loss up there. As you can see, it actually goes all the way around. We have run and sell side, aggression, market shift, 5-minute fair value gap mitigates that, maybe a lower time from entry, and continues higher. So as an example, GBP dollar does look like it follows that exact same thing, but I can't say for sure, and I'm not gonna really participate on something like that. So 1 minute, what happens? We still have the fair value gap barely mitigated, and what do we get around this? So let's put it on another color. As you can see, price multiple times coming and aggressively rejects the level, pulls away, comes back down, rejects, and then aggressively lower, takes all of that, sells that liquidity, mitigates the fair value gap even further, and then we get, mitigates even this tiny bit of a order block that we have here, right? Cause that aggression, price comes back down, mitigates that, goes aggressively higher. What do we have? Run on sell side, mitigation of 5-minute fair value gap, market shift above this high, fair value gap to execute on. That was my entry, and target was difficult because we really couldn't do much about it because we either say, so we're either looking all the way up to this high, or we're just settling down with something, which I decided to go for 5R, somewhere around there. And as you can see, price was took that target and then continued going lower. So last trigger, because I was looking at it from the 5, okay. So last one, as you can see, it's mitigated down there because I saw that it barely, my target was somewhere around here. I can't really say for sure where it was, but basically saw that it barely missed it. Let's suppose it was something like that, barely missed it, and started going lower. I said, let's just close it and fuck it, right? So what is this trade based on? Exactly on this. We have the run and stops. Let's actually go back up. Let's hide the executions because they're pretty ugly. We have the run and stops. We have the aggression. We have the market shift. The market shift. We have the fair value gap where it has to happen. Mitigates that. The 1-minute entry happens right away. Something I forgot to add is today I took 2 losses theoretically and 1 win. So going just with raise to roll ratio, not counted percentages because I risked 1% on the first, 0.5% on the second, 1%, more than 1% on the third. That was -1.5 plus around 4 or 4 or 5% with partials and everything. I ended up pretty high up, but overall on risk to reward ratio, I ended up by 3R up by 3R. So theoretically a 3%. If we look at it from here, we're talking about minus 170, minus 246, and then we have to count 583. Again, I'm not counting the GBP dollar trade because it doesn't count in my opinion. I would have not added it on the resume anyways. So as you can see, not high, but up by $1,600. So yeah, it's really good, really good. Theoretically will be more than a 5% on it. So yeah, I just wanted to add this a little bit. Lovely price action. This is a trade that, as I mentioned through Telegram this morning, I was today probably would have been a day that even if I was trading a challenge or funded account, I would have not traded. But this trade right here is a pretty clean example of how opportunities tend to show up when we wait for those clean opportunities. And I do believe that this would have happened another day, or if I wanted to trade today, I do want to believe that I would have taken this on a challenge or funded account because again, it has everything that we look for. There's nothing that would have or should have make me avoid this opportunity. Only problem again would have been target, right? Because target could have been, we could say, okay, so minimum we're going above this high theoretically, right? Because we want to take this highest to follow the trend. But if we need at least 4R, we have to go up to this, which to the left, we don't really have much to back that up, right? All of this has a huge void, right? That we don't really have much highs unless we wanted to go for that one, which is exactly 5R. As you can see, that's something. They want to go further. Maybe we want to go, as an example, with the fair value gap. The Fibonacci, right? So 50% is here, which also makes it a not really good target overall because we need at least 4R. So it could have forced the 4R or could have forced the 5R above this high, but either way it would have been a little bit of a gamble because we don't really know what to target, right? We could say if the trend is supposed to be respected, this high is supposed to be taken. Yes, it is. But now the thing is that, as an example, let's go to a higher time frame, and let's delete all of this. It's just like that. Fuck it. As an example, what could have happened? Now we have. Let's go to 15. This is what we have, right? We have the higher high, higher low, higher high, right? Well, I'll turn it all the way up here. This could be the higher low, definitely. But what if something like this happens? And then we have the higher low and then the higher high, right? We can be aggressive, or we can trust as much as we want the trade that we're onto, the trend that we're onto, but price doesn't necessarily have to follow that trend from the point where we're executing, right? So as an example, again, if I was to execute in here with my stop loss down here maybe, or something like that, price might come back down, still respecting this low, I get taken out, or it goes slower, maybe mitigates this order block, maybe an order block in 1 hour, as we were able to see, which was a little bit lower than this. And then it continues going higher, right? So we were right about the trend, but the area where we executed was it's not that it wasn't right. It did work out for a bit, maybe good enough for us to take that trade, for take a take profit or take some good partials. But overall, it didn't work out as far as we expected, which made us either take a loss, take a break even, or losing some profits, which wasn't entirely necessary, right? Also, me personally, I'm a short time trader, or scalp, or maybe it could be considered, because every single trade that I've taken in the past maybe has an average of lasting an hour, maybe an hour and something. In some cases, it can take longer, maybe 2-3 hours, due to the fact that it maybe ranges through the beginning or through the ending of the trade. But usually I'm taking partials within the hour or the 30-minute mark, right? So I don't want to hold trades throughout the entire session, right? Because it's not the way that I trade, right? That's why, as an example, even if I had the opportunity to go for a 10-hour trade, if I can get a 10% out of a trade, I'm either at 5% or a 5-hour. I'm getting off of it at least 80% of it, right? If I haven't taken partials before that, of course, because maybe I did take partials before that, which allowed me to already be in profits for the day, right? Or on this trade specifically, without actually closing the entire position. So yeah, that's pretty much it. That's why, as an example, if I would have taken this Ponder Challenge, this would have been a 5 or 4R. Probably 4R, because again, we don't really have much to target in here. There's no clear high, there's no clear low, there's nothing that we can really use to say, okay, price could go up to this. Maybe we could say we have this 15-minute order block here. The price has actually mitigated quite lovely. Maybe there's a 1 hour order block in here, which we could have used as a target. Maybe just use retracements, right? From this, I think it was, yeah, from this to that, and 50%. Again, that would have any bad risk or reward ratio for me, so nothing that I could have done about that. Multiple things that we can use as targets. As an example, maybe this is breaker. Maybe I saw a video about breakers, but I don't remember I really don't remember a lot at all how it worked out, but I do think that this could be considered a breaker, right? Which price estimate getting it causing quite a reaction right now. But that doesn't really matter, honestly. We got an opportunity to buy. In my opinion, none of the opportunities to sell were something that we should have taken advantage of, and I don't think I would have taken the sell down here on a challenge where funded. I don't think I would have tried to buy from the first reaction on this, and if I did, well, I would have taken a loss and then recovered from that, ending the day on either 3% up or 4% up, right? Theoretically taking 0.5% risk on this one, so even further than that, right? So let's jump into the conclusion. I think I did a really good analysis today. I think I did right thinking that I should have not traded on a Thunder challenge account today. It was a little bit of a complicated price action, which again, even though it was complicated, could have had a really nice opportunity that I personally on paper trading was able to take. Yeah, that's really pretty much it. My bad was maybe taking this first one. I don't think that was a really good decision. Again, on paper trading, I tend to be much more flexible with what I take and everything. But I don't think I should have even considered that one. But well, it was a mitigation on the 5 minute, and well, it is what it is. Selling wise, I don't really think I should have been looking for sells entirely, right? I don't think the trend was all right for that. It could have continued to fall, definitely. But in my opinion, it took buy side liquidity, seeked, or went lower to seek sell side liquidity to now just continue higher. I do believe that this low is likely to be respected, but maybe it won't. And I would have not participated on an entry here all the way up to this high. Right, we're talking about 8%. I think I was able to see that is really not worth it for me. Right, probably more than 8% up there. And what to do differently? Well, next week already, because it's Friday. Really, not much. I don't think I did anything wrong enough to say this is something that we should do different. I think I should have been more aggressive on sticking to the weekly bias, which has been bullish since Wednesday, and not even consider the sell side. I did say through Telegram, right, that I was somewhat bearish due to how the day begun. But overall, should have just continued to respect that weekly bias, which theoretically should be respected through today's price action as well. And it ended up being, but maybe the close later on is bearish. So I guess we'll see how that turns out. And I think that's pretty much it. I really would have not done much differently today. The 5 steps showed up just once, right? And that's literally the only trade that worked out today. So that's great. That's great to see. And that's all. That's pretty much it. So I hope you enjoyed this video, and I'll be talking to you on to the next one.